The point is, think out 100 years. Think why? Not because you're going to live 100 years, but because thinking 100 years is clarifying. If your family had thought 100 years in advance, you wouldn't be here. If your government doesn't think 100 years in advance, there would be no cities. If you're going to do great things, you need to look out 3 generations. It's very clarifying. And all of the mistakes, all the fear and anxiety that makes you do stupid things or makes you do knee-jerk things that destroy wealth and create chaos, they come about because people are thinking about 3 months or 3 weeks or 3 days or 3 years. And so my advice is for you when you're thinking about more than 4 years out, think about yourself, your life, your children, your children's children. Now, if your family or your company had $1 million, a lot of money, I grant you, but if you had $1 million, if you invested it, in cash at a 7.5%, or 7% degradation, you're going to end up with $900 worth of value left after 100 years. Your money's going away. You're going to destroy all your wealth. If you invest $1 million in bonds at a 5% yield, or a 5% pre-tax, or a 3.5% after-tax yield, and hold it for 100 years, you will lose 96% or 97% of your wealth. You'll go from $1 million to 31,000. Bonds will destroy your wealth. If you invest in the S&P index, you're just going to have the same amount of money after 100 years that you started with. You're not going to make any more. If you were to split that portfolio between the S&P index and Bitcoin, and this is assuming 7% for the S&P and 14% for Bitcoin, and assuming 7% monetary inflation that I talked about, you're going to convert $1 million into $512 million. It's extraordinary. And of course, if you simply invest the entire amount in Bitcoin, you're going to go from $1 million to $1 billion. It's 1,000x. You're going to double your money 10 times. And so you can see the difference between a mediocre strategy, a conventional strategy, and a winning strategy.
Crypto family, as you can see right there, that was Michael Saylor saying that Bitcoin is the only winning strategy. Guys, if you're new to the channel, please subscribe. We have new crypto, Bitcoin, financial related content coming out every single day. And in today's clip, we're going to be checking out a recent presentation that Michael Saylor did, where he talks about why Bitcoin is important and why Bitcoin will perform very well in the future. So definitely recommend you watch this one all the way to the end of the video. Leave any of your thoughts in the comment section below. Let's go ahead and jump into today's clip.
The most important thing to understand is that companies are attempting to increase their wealth by creating products and services. Governments are increasing their wealth either by fighting wars, passing laws, or by printing currency. So we could start with an observation in this entire last 100 years. The world reserve currency, the US dollar, is collapsing versus assets such as the S&P index. The S&P is 500 of the most valuable companies in the United States, or maybe the world. It's collapsing against real estate, against gold, against art. And it's hard to see this over the course of a year or 2 or 3 years. But if you look over the course of a century, I find it to be very clarifying. And on average, what you find is the United States dollar is losing 7% of its value each year for the last 100 years. Now, if you look at government statistics in the United States, they will tell you that the inflation rate is about 2%, and they'll show you a graph like this, which shows that the dollar has lost, something like 94% or 95% of its purchasing power over this 100 years. But that's based upon the consumer inflation rate. Consumer inflation is the lowest inflation rate. It's a market basket of goods that are easy to manufacture with a machine, or they're easy to print, or they're they're not labor intensive, they're information intensive, like watching YouTube videos, or boxed starch, or things manufactured. This is the lowest inflation rate. In fact, the the producer price index is a higher inflation rate and the asset inflation rate is higher. So it's a mistake to think that $26 in 1910 is, or 1920 is worth $1 in 2020. In fact, if you look at the US dollar versus other assets, you can see it's losing value at a much more rapid rate. So the consumer goods rate is 93%, minus 93%. That's this chart. The US dollar versus gold has lost 99% of its value. We went from $20 an ounce to $2,000 an ounce, and so 99%. And the US dollar against the S&P index, which is the US dollar against a corporation, of a successful competitive company, or the US dollar against Miami Beach real estate, has lost 99.8% of its value over those 100 years. Now, that's not really well understood. Most people don't think the inflation rate is 7%. They think it's 2%. And the difference between 2 and 7 is 93 versus 99.8 or 99.9. Now, let's focus in on why the dollar loses value against real estate so rapidly. I'll show you a picture of Miami Beach. You see, what you notice is there's a fixed amount of beach, and all those buildings on the beach are there because the value of an acre of land on that beach is $20, $30, $40 million. Very expensive. In fact, the value of an acre in Miami Beach about 90 years ago or 100 years ago was $10,000 an acre. And a few years ago, it was $10 million an acre. Today, it's $20 million. Most investors think that they're smart, and most people think that investing is the solution. But it turns out that investment gains are generally just driven by the inflation rate. So if you look at this chart, the green line is the money supply in the US dollars, and the red line is the S&P index, the stock index. And as you can see, you could, if you didn't know about the money supply, or if you thought the inflation rate was only 2%, you would think that your stocks are outperforming inflation and your companies are brilliant and they're succeeding and your investment strategy is brilliant and you're making lots of money. But what you can see here is that a portfolio of companies is really just tracking the money supply. The companies are doing things. They may be growing 2% a year, but the same 2% a year of improvement in productivity is being offset by 2% chaos and destruction and risk and liability that people don't pay attention to. And so when you net it all out, a portfolio of companies is really just tracking the inflation rate in the money supply. So, and it's the longest duration asset. You know, a bond could be 30 years, but Bitcoin is forever. Bitcoin's a 1,000-year asset. I mean, it doesn't expire. Companies don't last 1,000 years. Buildings don't last 1,000 years. I mean, I guess the closest thing to something that might last 1,000 years is a bar of gold, but gold isn't scarce. You know, when the Spanish came to the New World and the conquistadors stole all the gold from South America, they brought it back to Spain. They created massive hyperinflation and tripled the supply of everything and crashed their own economy in Spain and the rest of Europe. So there's always been inflation, even in gold on the gold standard, because it's not scarce. Bitcoin is the first monetary asset that is not intrinsically defective. That's a big sentence. Think about it. It's the first non-defective asset. People will build, if you double the price of real estate, they'll create more. If you double the price of a stock, they'll create more. They print more fiat currency. They mine more gold, but nobody can create more Bitcoin. So this is a big idea.
And thank you for watching all the way to the end of the video. If you found any value, make sure to hit that like button. My name's Aaron from the Bitcoin Bros. I'll see you guys in the next one and have a great rest of your day.